employee, but a 1099 contractor. Brad can touch on that. And I'm just going to let him take it away because he is the expert and he specializes with realtors.
Oh, all right.
Full disclosure first, we are recording. Is that okay?
Does my hair look all right then? Just want to make sure.
Perfect.
All right. Well, thanks, Chris. Thanks, Kristen. Appreciate it. So, Chris has been through this spiel before. A couple things have changed probably because I think that was last year or the year before. So it's a good time to be a realtor. Okay, so you guys are. I wish I was in your industry for the first time ever, and I've been doing this taxes almost 30 years. So it's a great time to be in real estate. We're getting a lot of new clients. So there's a lot of new realtors, a lot of new agents, a lot of people passed the test. A lot of people had a great 2020, okay, despite coronavirus. The problem is we have a lot of agents that went from making X amount to 3 times X, okay, in 1 year. So we got a lot of people worried about taxes, and you guys have some very specific tax issues that don't apply to most taxpayers. Okay, you guys are commission only, as you well know. You don't get paid every 2 weeks necessarily. You only get paid when you close. And if you look at your 1099, you'll find taxes are not taken out. Okay, so that's some very specific issues that only apply to you guys really. There's some other outside salesmen, but basically just for real estate agents. Okay. So we have a subsidiary called Realty Income Tax Advisors, and as the not so tricky name would imply, we deal with realty. So most of our clients are real estate agents. We have a lot of landlords, a lot of people that do flipping, but everybody that we deal with is involved in real estate almost some way, because that's our specialty. So some of the big things that we find with real estate agents is if you look at your tax return from the last time you filed, if you look at your 19 tax return, most realtors, there's a thing called self-employment tax, okay? And that's your part of Social Security and your part of Medicare, and I don't want everybody to get bored all of a sudden. But most realtors end up paying as much in the self-employment tax as they do in income tax, okay? And a lot of people, I guess, don't know the differentiation because it's just all on your tax return. It's in that 20-page thing that you get done and you just file it. But just for numbers sake, if you make 100,000, because the math's easy, and you're single, and you take the standard deduction, your income tax is going to be about 13,000 and change, but your self-employment tax is going to be 14,700 and some. So you're going to actually pay more in that self-employment tax, and it's on your regular 1040 than you do in income tax. So you're looking at about a $28,000, $27,000 tax bill. That's huge, especially compared to a W-2 employee that on that same income would owe about 13,000. You're going to owe a little bit more than twice. And that's that self-employment tax. So if you want to, if you get really bored and you can't sleep tonight, go back home and whip out your old tax return, look at line 57, and that's self-employment tax. That's what most realtors pay tremendously. The biggest portion of their income tax is actually self-employment tax, not income tax. So the long way around that, the biggest tax cut, the single number one item that saves most realtors the most money is setting up as an S Corp. Okay, and I'm sure all of you have heard or have friends or you've been down to Airport Drive and sat through somebody chatting about taxes or finance before. You've all heard about an LLC, okay, or you have friends or someone that's an LLC. An S Corp is a real simple structure where we can take an LLC and switch it in to become an S Corp as your tax filing status. And what that does is allows you to get rid of most of that, 2/3, let's say, maybe 3/4 of that self-employment tax. So just to keep the number simple, on $100,000 in income, okay, we can save like the average client $7,000, $8,000 in taxes. So on 100,000, save you 7 or 8,000 in taxes. So that's pretty cool, and that's what the S Corp allows you to do, is if you file under that structure, because it allows you to dramatically lower your self-employment tax. Sounds complicated, and it is. Usually when we meet with the client, I have a little chart that I'll show, a little flow chart of how it works, because just conceptually it sounds difficult. That's the number one thing that we have that saves most real estate clients the most money. That's really cool. So the thing is, there's some, If you set up an S corp, it has to file its own tax return, just like Microsoft or Google or McDonald's. Your S corp will be your own company. So if I'm Brad the Realtor, hey, it's Brad the Realtor LLC, and my broker will make my commission checks or direct deposits out to Brad the Realtor LLC instead of Brad. Okay, so there's some, I guess, inertia. There's some paperwork involved. So really, you have to have a certain amount of income to make that worthwhile. And I'll tell you a little story because it's a good one. We have a client, and he sells 3 or 4 houses a year. Okay, he's a realtor. He's a real agent, but he doesn't work a lot. He's kind of a house husband, I guess. And I don't say that disparagingly. I'm jealous. But his wife's an executive, and she makes really fantastic, amazing money, goes all over the world. But he helps get the kids on the bus, has to be home when they get home and stuff like that. So anyways, he only 20,000-30,000 a year is what he makes. And he met with me and he's like, hey, should I set up an S? And I'm like, it'd save you a little tax money. Okay. But at $20,000 or $30,000, you having to file another tax return and you have to do some payroll and it's not worth the hassle. Okay. At that income level. So that's the thing with an S corp is it'll save you money, but there's a certain kind of income level you have to be at for it to financially make sense. Okay. And if you're 50, 60,000 and above, yeah, it starts to make sense. At 100 for sure, absolutely. If you're at $200,000, we're probably going to save you 20 grand. Okay, 20 grand. But if if you have 1 or 2 closings a year, it might not save you much, and you're certainly going to have to pay more to do the tax return. So there's some inertia involved in that. So if
Hey,
anybody's
Brad,
got any, yes,
I have a question.
yeah. So you're driving and taking a CE class. How awesome is that? Cool.
Yeah, I'm actually on my way to the office, so hopefully I'll be sitting down soon, not in a car. Hey, so if I have just opened an LLC, I know you said S corp, but I was under the impression I should be opening an LLC. It was established as of January 1st, 2021. I'm
Yeah.
not going to be able to file my 2020 taxes as an LLC. Is that correct?
Correct. So what you want to do is, I would act. So all of our clients, we advise you to set up an LLC, and then we switch it to an S. It's actually easier. So you did the right thing. We advise all our clients to set up an LLC, and then we switch it to file as an S corp status with the IRS, because then you did the right thing. You don't have to file an annual report with the state of Ohio. You don't have to pay Ohio tax on the income. There's minimal paperwork with an LLC. So that's the 100% the right way to do it. And then what I would recommend you do is if if you're going to have a bunch of sales and make it worthwhile in 2021, hey, let's switch it for now for 2021. Okay. And then you can get the right paperwork to KW, which is simple W-9. Hey, pay my LLC instead of me for my commissions. And then it's super simple. So yeah, that's easy to do. And then you just get an EIN, get a bank account, stuff like that. If you didn't do that, we have a whole check sheet that we'd be happy to send you of how to go about doing that. But that's, yeah, you're doing the right stuff.
So either way, I won't be able to have any benefits of that until next year's filing.
Correct. Yeah, you can't, the bad thing, there's good and bad. So the IRS, the general rule is you have to have an S corp set up by March 15th of the year. So if you wanted to do it for 2021, you have to have it set up by March 15th. But there's an awesome exception that they made, that if you didn't know or didn't have reason to know that you had to have it set up by March 15th, they allow you to appeal that. And we do what's called a revenue procedure filing. We do it. You don't have to worry about it. We send some paperwork in and just say, hey, Brooke's a realtor. She didn't know she had to have this filed. It's not part of her job, and they automatically approve it. So I've been doing this 28 years. I've had one S corp that was denied with that late treatment. And it was a guy who's a client of ours that's a tax attorney. And they're like, no, he kind of should have known because he's a tax attorney. Okay. So yeah, I get that. But you guys are realtors. It'd be like if I was a realtor and I didn't know what MLS was or something. It's obvious. It's something that tax people should know, but you'd be fine. So yeah, and I would definitely set it up this year because it allows you to save just a ton of money. And why they set it up like that, I have no idea, but it's just a cool thing. So I'm an S corp too, and it saves me lots and lots of money. So it's a good thing.
So if I have an LLC, it somehow needs to be switched to an S corp before that date, or you guys just take care of that?
Yes, yeah, we do. we actually do the filings with the IRS, because you can do it one of two ways. You can send what's called a 2553 into the IRS, and it's a request for S corp status. We recommend you having an accountant or attorney do it, because it'd be like, the good analogy I could use is like if you guys go to a closing, having the buyer and seller do their own, HUD ones. It's just not going to happen right. You know what I mean? You guys call it the closing disclosure now or whatever. But you'd want to have somebody else do it. But yeah, you can have it done. So it's, yeah, you can have it done by the end of the year, and then you'd be fine. But the cool thing is, hey, you want to get an EIN set up, an employee identification number and a W-9 sent to your broker. So your commissions actually go to the LLC all year instead of you personally. Because when people try to, we'll have clients that'll Google it or try to, I sell a book. I wrote a couple books, and people bought my book on Amazon, and they'll read like the first sentence, but not the second. So they'll set up the LLC and do the S corp and do all that, but they'll still have their broker pay themselves. So they'll be like going to Brad the Realtor instead of Brad LLC, and then Brad's social number. So then next year, the 1099 from the broker comes out. That's too bad. It's really, the payments have to go to the company legally. And sometimes the broker will look the other way and kind of change the 1099, but they're not supposed to. So that's the thing. So yeah, you'd be good for 2021. So
okay, thanks.
Yep. And then you have to, but yeah, for most people, it'll save you a bunch of money. So the number one thing is, hey, S corp and LLC, and that works if you have a bunch of closings and you're, like I said, making 50, 60 grand, or more, it definitely saves you more money. So that's the number one biggest thing. The second biggest thing now that saves most realtors the most money on their taxes is, so everybody's heard, hey, you guys drive a lot. You all know that. I mean, you guys drive all the time. You're going from place to place to place. So a lot of new clients we get that are realtors, hey, I drove, 10,000 miles, 58 cents a mile, $5,800. Hey, that's cool. You can do that. But there's a cool thing that they passed, and yes, this is a cool tax thing, so stay away. In the Tax Cuts and Jobs Act of 2017, that allows you to what's called depreciate your automobile. So you can take your car. So I'm Brad the Realtor again, and hey, I have a $40,000 car. All right. I use it 80% for business. That's $32,000, let's say. Well, I can take my car and put it into my business for tax purposes. I don't have to get it retitled. I don't have to change the insurance, no new license plate, nothing like that. But what I do is I say, hey, for tax purposes, I'm declaring this personal asset to be a business asset. All right. And you use it at your business use percentage. Okay. Well, what I've done is just generated a $32,000 tax deduction. Okay. So let's say I made 100 and I put my car in, and the business use value of it's 32,000. Well, I've taken my income from 100 to 68,000, just like that. So that's a super cool thing that was allowed by the Tax Cuts and Jobs Act that we find very few new clients know about. And it's a fantastic deduction, especially for you guys, because it allows you to take that big lump sum thing in 1 year. And also, in addition to what you can do is you can take, hey, here's the value of the car. All right. You can also take your actual cost of gas. Okay. So, hey, I spent $2,000 on gas. My insurance was $1,100. I bought new tires. I spent X amount on car washes. So you get to add all that other stuff on top of it too. So that's super, super huge. And it's for most of our clients, you get a far bigger deduction than if you just took the mileage. Okay. And usually the question that follows that is, well, hey, how do I determine my business use percentage? Okay. So if you just take mileage, you go to your accountant every year and say, hey, Bob accountant or Jill accountant, I drove X many miles. Well, we use that's the same mileage figure that you would have, and we apportion that out of, hey, I drove 10,000 miles, 8,000 of them were for business. We use the same percentage to determine the business use percent of the car. So for most of our clients, that's a huge difference, in taking the full amount of the car. So somebody have a question?
I do. So can
Yes.
you do both? Can you write off miles and the depreciated value of the car?
No, not in the same year. So you can do the car and the actual cost of gas and stuff like that. But if you take miles, the reason the miles is 58 cents instead of the actual cost is it builds into the depreciation value with it. It's just that if you have a decent car, okay, normally you're going to get a lot more money out of taking the car and the actual cost. All right. So like I I have one client, he has a fantastic realtor. He's got a team, very successful. He has the worst car I've ever seen. It's like an '03 Acura something something. And this guy makes like big time six figures. You all would know his name, but he like parked in my parking lot, and I swear there was rust where he where he parked. Okay, well, for him, he's going to make more doing mileage, because if we took his car, it's worth like $200. You know what I mean? So, but for most people, they're going to be financially better off taking the value of the car, and then the actual cost of gas, actual cost of insurance, actual cost of car washes. I mean, even you get those little pine cone air freshener things, you can write those off as well. So we kind of do it both ways. We figure out what's going to be most money for the client, and then we take that way. So we'll look at, hey, if you drove 70,000 miles, Liz, hey, you're going to be better off taking the 58 cents a mile if you're like my guy that has the $300 '03 car, you know. So we kind of look at it whichever way is going to benefit you most. So
I have a
that's how
question.
that works. Yes.
So is that something that you can only do once, or can you write your car off yearly?
You can write it. So if you buy one car, you can write that car off once. Okay.
Okay.
But you sell that car or trade that car in and get a new car, then you can do it again. So
Okay.
you gotta, it's kind of like if you buy the car, you can only expense that same car one time. But then what you can do is the next year switch back to mileage. Okay. But we kind of look at it whichever way saves you the most money. It's just a lot of people didn't know about the bonus depreciation thing, and now we're into the going on the fourth year of it, and it's time people knew about this. And a lot of times if you go to, like, a lot of accountants might have 2 or 3 realtor clients or one, so they don't deal with it a lot. They deal with people that just have a W-2 and they can't write off all the cool stuff you guys can, so they might never heard of it. So we're shocked, and we get new clients, and no, I never heard about that. So for you guys, hey, it could be a big deal and a lot of money. So
Okay.
yeah.
Cool. Thanks.
Yeah, no problem. So
So
that's
Brad, what I'm
yes.
hearing is we should probably buy a new car every year.
If you want, yeah, if you want, you drive a lot, it can, honestly, if you want one, you guys are in one of those positions where, like my guy that has the rusty junky car, and I'm not judging,
It's time for him.
but people, people make a perception on a realtor. Like if you guys show up and you have a junky car, some of them might think, hey, this guy doesn't know what he's doing. It doesn't seem to hurt my client, but I'm shocked. It's like if you went to see an accountant and he had papers all over his office and a mustard stain on his shirt, and you know you know just people judge on stuff like that. So for realtors, I think you guys have a good case of, hey, I need a nicer car, because if I open the door and McDonald's bags fall out, people might think, wow, is this who I want to hire? So yeah, if you want a new car, hey, at least you guys can write it off. So that's a great one. So between the S Corp and the car, we have a lot of people saving 20,000. The first year they come to us. It's not because we're geniuses, it's just because, hey, something was missing. So that's a really good one. And kind of the third biggest thing that most people miss out on is the home office deduction. So we kind of the big persistent rumor we hear about home office is, hey, if I take home office deduction, I'm going to get audited. Well, that's not really true. So the IRS even has a form that goes with your 1040 on your home office expense. Okay. But what a lot of times it'll happen is, they've heard, you hear through the grapevine, hey, if I write off home office, I'll get audited. Well, there probably was someone that did get audited, and they probably tried to write off their whole house, $190,000 home office expense. Well, not really. So what you can do, though, is write off, the area that you regularly and exclusively use for business. So I'm sure all you guys were working at home a bunch last year, because our New Albany office, we're in a broker's office. We're in a Remax building. We have the north half of that building as our firm. Okay, well, on the other side, they used to have people come in all the time and use the desks, like, they paid the desk fees or whatever. No one used those computers for like 5 months because of coronavirus. So I know you guys are all working at home. Hey, you can write off a percentage of your utilities, a percentage of your interest for your mortgage, certainly a percentage of your internet. Okay, so if you're working at home all day, hey, you're using your home internet, you're on MLS, you're looking at listings, you're doing other stuff, you're emailing. Hey, I'd be writing that off. If you're paying $200 a month in internet, and you're using it half for work, write that off. That's $600 a year. Okay. If you get a new desk, if you get a new chair, if you get a new computer, you get a new printer, I'd write that off too. And then if you have a home office and you got it repainted, you bought new shelves, write that off. Now, so that, you know, that might be 2 or 3,000 bucks in home office. That's what our average client has. Again, that, you know, for me, yeah, that's a lot of money. But the other thing it does is it opens up the door for more mileage deduction. Okay. Let me say that again. Having a home office opens up the door for more mileage deduction. So if you have a home office, anytime, and you call that your administrative office, under IRS code, anytime you leave that for work purposes, it becomes deductible mileage. All right. So if you leave your home office, which is your house, to go to a listing in Westerville or, you know, Grove City or wherever you're going, you can write that mileage off. Okay. If you do not have a home office, if you do not have a home office, your first drive of every day is not deductible. It's called commuting mileage. Okay. And it's probably something you didn't hear about. There's a lot of other accounts that maybe don't understand that real well, but that's, you know, we specialize in realtors, so we're kind of on top of this. If you leave your house and you don't have a home office, your first drive is commuting mileage every day. So if you go to an office, if you guys go to your building, you leaving the house and going there is not deductible unless you have a home office. Okay. And that's why I said the home office doesn't necessarily need to be a lot of money, but what it does is allow you to deduct much more mileage. Okay. What's in the tax code? What's a criteria for having a home administrative office? One big thing is where you pay your bills from or where you do your invoicing. So you as a realtor, how many of you keep your personal checkbook at the broker's office? Not very many. I've got like 2 clients that do that, and they both own the building and they're both brokers. Almost everybody else, they keep their personal checkbook where they pay, you know, you guys pay your board of realtors dues, or you pay your cell phone bill, or, you know, the checkbook you use to pay. Not that everybody writes checks anymore, but they do online billing, but most people do that at home. Okay. I do that at home, even though I'm have 2 buildings, you know what I mean? So what it does is it opens the door for you to drive a lot more. And, you know, if you go to your accountant and say, I drove 10,000 miles, we're going to believe you. We're not going to double check, you know, where you drove every day. But the reason I say go through all this is a lot of times we meet clients for the first time when they're getting audited. Hey, Brad, I'm getting audited. Can you help me out? You know, I went to Skeeter, the accountant, and he put, I drove 170,000 miles and I'm screwed. So a lot of times, you know, if you get audited, you'll have to prove all those miles. Okay. And that's why the whole big thing about the home office deduction is, hey, you're going to get a lot more deductible mileage claiming home office than otherwise. And that's just if you get audited, but you know, 2 or 3% of people get audited every year. Hey, you might as well take advantage. So long story short, taking the home office gives you a couple grand probably in expense and way more deductible mileage. So the mileage is the other great big thing that is an advantage for home office expense. So and then the other thing is meals. So in 2020, it wasn't much. It used to be realtors would take other realtors out to lunch, take people out for drinks. You know, they'd go meet with a broker, or, you know, even a mortgage broker or a title agent they did a lot of business with. And I know that blew up in 2020. In prior years, that was another big expense that a lot of our clients had was, you know, meals. Entertainment, you can't do that anymore. So it used to be, hey, I wanted to take some folks out to Blue Jackets games or Ohio State games. Used to be able to write a portion of that off. Can't do that anymore. So unfortunately, what happened was a lot of the guys, the rich business guys in LA, were getting courtside Lakers seats and writing it off as an expense. So, hey, I'm getting $70,000 floor seats for Lakers games, writing it off as a business expense. And, you know, Congress is like, nah, we're putting a stop to that. So now it kind of blew up normal people like us, you know, taking a friend to an afternoon Clippers game or something like that. So you can't do that anymore. So unfortunately, that deduction went away. So those are the 3 biggest things. And there's a lot of other little things that you can write down. And what I might do, I might send Kristen and Chris, if I could. I've got a whole sheet of different expenses for realtors, and it's a sheet of several sheets with just every kind of thing you can have. So some of the sheets are old, but everything from board of realtors dues to your license fee. Like I even have stuff on there for fax machine and long distance. So I kind of need to update my form. But in the old days, realtors used to go down to the county courthouse and get the old plat books to find out the little maps of the subdivisions. That's on there. So that every kind of possible expense that a real estate agent might have, I think we have listed on there. Because I think you'll find that upon deep analysis, you spend a lot more money, okay, on your business than a lot of people realize. Okay, so everything from like a lot of realtors get Better Homes and Gardens magazine, or they'll get Country Living, or they'll get all these other magazines. Hey, that could be a business expense if you're looking at design things in a magazine, and it's something that helps you. Hey, if I'm going to stage this house or help a client stage a house, and I learned something in a magazine, maybe we can write that off. Um, we have a client where we write off a portion of her cable bill every month. I think it's like 10%, but she watches HGTV, I think, a lot. And hey, I watch this for work a lot, and I'm going to write off $20 a month towards my cable bill as a business expense. Well, I think that's legitimate. Okay. And the kind of the analogy I use is a lot of the people that trade stocks or into stocks and finances, they write off a portion of their cable bill because they're watching CNBC all the time, the stock channel and stuff. I think that's totally legitimate for you guys to write off a portion of that for HGTV or whatever helps you do your real estate business. So we got a lady that just bought a drone, like a flying through the air drone, because she takes pictures and videos of houses with it. So another big thing you guys probably spend a lot of money on is staging stuff. So if you buy throw pillows, or, I have a lady with like a whole garage full of stuff, furniture and stuff for vacant houses that she put in there just for staging expense. You can write that off. All right. So there's a lot of stuff that maybe you spend money on that you're not, it's not on the top of the mind, like mileage or something, but you can actually expense legitimately. So kind of the last thing that I just wanted to touch on as far as overall deductions was you can pay your kids. So older folks that are my age, in the 50s and stuff, if you have high school age kids or college age kids and you give them money, hey, Junior, here's $100 spending money this weekend. They bug you, Mom, Dad, can I have some money? Hey, if you're a realtor, what you can do is, that's fine, I'll give you some spending money, but you got to earn it. You can have them go to an open house with you. I don't even know if they do open houses now with Corona, but in the old days, pre-Corona, you used to, you go to an open house, have a dish of candy or whatever. But hey, you can, in exchange for any spending money, have your kids rake the leaves, stand there with Mom or Dad, wash Mom or Dad's car, do something like that. You can have a legitimate business expense, give them $100 a month spending money, and you call, it's income to them. But if they're young, they don't have to claim it on their taxes. You can claim it as an expense, but they have to do some real work. But if you got 2 or 3 kids, hey, that adds up to $200 or $300 a month. That's $3,600 a year. Have them do some work for you in exchange for the allowance or the spending money, or, hey, I'm back from OU for Christmas time, and I need some money to spend, Mom and Dad. Hey, you know what? Do a little work to help Mom or Dad's real estate practice, and then we can give that money to you. You did some work, and we can write it off on our taxes. So that's kind of like the last big thing. So anybody got any questions? Anything I can help out with? Because it is tax time, so we are taking new tax clients, of course. But if anybody's got any questions, we usually like to do a Q&A thing. And then if you got something you don't want to ask, call me later. If you don't want to do it on a Zoom call, I get that too. So
Put his information over in the chat box, his email. I don't think I have your phone number, but I could probably find it.
yeah, sorry, it's 614. I can try to get on the chat box and do it. I have to find my glasses.
Okay, there, and you just tell me 614.
Yeah, 524-4888. So yeah. Well, yeah. A lot of times, taxes is a personal issue. You don't want to talk about something on a Zoom call in front of a bunch of people. So I get it. So
I have a
yeah.
quick question, Brad. So I am an LLC and I'm going to file as an S Corp, and I know I need to do some payroll in order to make that happen.
Yeah, you got it.
Right. Now I've done this for a little while. Do you run the payroll, or do you recommend people go to like ADP?
So yeah, a lot of our clients do ADP. A lot of them do paychecks. We do payroll, but we despise doing payroll.
I don't blame you.
And the reason is, so we use ADP as our software backend. And like my cost just to use ADP software is almost what they're going to charge you to do your taxes, to do it for you. So I actually pay paychecks to do payroll for my accounting firm. Can we do it? Sure. We got 9 people that are CPAs and EAs here. But for what they charge, it's so cheap for us to have them do it because we have employees in 5 different cities, so they do the city tax, they do the school board, the school district tax for the people that have that. It's great. So Paychex or ADP, go to one of them, and what you're going to pay for a year of them doing it is well worth it, because if you're just late once on a payroll tax return, okay, the fees and the interest and the penalties are more than you would have paid them all year. So we highly recommend using a payroll service. We use Paychex. ADP is really good. There's a local one here in Lewis Center called Apex. I've dealt with her a couple times, and she has several realtor clients. So highly recommend. Almost no clients ever done it right when they try to do their own. So some of those things, it's really not worth trying to save money on doing it yourself, because you don't. And payroll is definitely one of those, because you have your federal, you have state of Ohio. If you're in the city, you have city tax, and then you have jobs and family services, which is unemployment, and BWC, which is workers' comp. And again, none of them are going to be much money that you're going to have to pay for those things. Like we have 11 people. I think my workers' comp bill is $126 a year. Okay, it's not much. So for you being one person, it's going to be almost free. The point is, if you don't file or you file late, you have penalties and interest and stuff like that. So that's why it's worth having a payroll service. So. Yeah. So if you're with ADP, they do great. So
do you do like a free consult if somebody
Oh,
wanted
absolutely.
to
Yeah,
Okay.
yeah. As you guys can probably tell, I like talking. So if you want to come chat, that's absolutely free. So, and a lot of times what we'll do is say, hey, please bring your last year tax return. You know what? And I'll look through it and I'll see what expenses you have. Because real estate and real estate agents is like the one thing I kind of know well. So if I'm looking through your stuff and I don't see any board of realtors dues, or not much in cell phone, or I don't see any closing gifts, or I don't see any staging expense, I'll be like, hey, why is that not on there? Because the normal process with an accountant is you bring your stuff, they sit and do your taxes. Okay. Well, we're a little different. You bring your stuff and I'll say, well, do you have this? Do you have that? What about your mind? So it's a little more back and forth. Because again, we have over 300 realtor clients. So, hey, if I don't see a lot of mileage, I'm going to ask. If I don't see a cell phone bill, I'm going to ask. So we do a little different process, where if we don't see something that we're used to seeing, we're going to ask for it. And generally that's to your advantage to save you more money. So especially with the car stuff. So yeah, anybody can come chat free. So.
Great.
I have a question.
Yeah.
Oh no, this is gonna echo. I'm in the same room as all of these. If you file jointly, let me go out of this room.
No, it sounds kind of cool. So
If you so loud. If you file jointly with your spouse, but then do you still file jointly if you have an LLC or an S corp?
Yep. So what it is the LLC or the S corp is going to file its own return. And I know you just set yours up. So what it's going to be, it's like, Brook LLC is going to file its own tax return. Okay. And it's going to have its own income and own expenses. And it's going to issue a small W-2 at the end of the year. And then hopefully more you're just going to take as income without paying that self-employment tax. And both those things just flow to your 1040. So it doesn't affect your married filing, joint filing status at all. It's just flow through items from your company. So your company is really the one filing most of the stuff, and the income and the W-2 part just get passed on to you. So it kind of simplifies things in that respect.
Okay.
Yeah.
For mileage.
Yes.
So how do you recommend tracking that for an agent? Like, do they literally get in their car, write what their current mileage is before they leave, and then write what their mileage is when they return back to wherever they came from? And
yeah, so that's that's a good question, because what the IRS code demands is just that. So under the federal law, and I'm old, so like I've had classes with millennials where I've had to, this is paper. It's like little dead trees they chop. so yeah, so sometimes the joke works, sometimes not. So I keep a mileage log where I went every day. So it's not my rule, and I wish it wasn't. But what the IRS code and federal law demands is, if I claim 10,000 miles on my taxes, okay, I have to come up with that 10,000 miles from, hey, January 1st I drove here to here to here to here. It was X many miles. January 2nd I drove here to here to here. So I have to go back. Um, if you get audited, but the law says you're supposed to have it anyways. I'll be honest with you, most people don't. So I keep a paper book. What's super easy is a software called Mile IQ. It's just mile like miles, and then IQ like intelligence quotient. Mile IQ, it's an app, and I think it's like 50 or 60 bucks. But what it does is you just turn the app on, and then every night, you tell it, or sometime during the day, you program it. Hey, sometime during the day, I'm going to swipe left and swipe right all my drives, and it's going to say business or personal. So you can just go and drive all day, don't worry about it. At the end of the day, or whatever time you tell it to, it'll pop up with a little thing, kind of like the kids with the dating thing, the swipe left, swipe right thing. It's like that, but you just put business or personal, and it'll track it. So you'll spend 30 seconds a day doing your mileage at the end of the night. Oh, this was personal, this was business, this was personal. And what happens at the end of the year is it tracks all those drives. Okay. And you can just click and email your accountant a spreadsheet of all that, and you don't have to do anything. So it's way better than, my old guy version of a paper book. All right. Mile IQ. So again, if you give your accountant, say, hey, Brad, I drove 9,500 miles. That's cool. I'm going to do your taxes and say it was 9,500. But if your name gets pulled out of the hat, okay, the IRS just selects you for a random audit or whatever, you're going to have to prove all those miles. And under federal law, the way you do that is a record of where you went every day that adds up to that number. Mile IQ is by far the easiest and most elegant way to do that. And I should probably get it, but I'm kind of stuck in my ways. So yeah, Mile IQ, super easy.
We have a question. She says, can you use your total mileage and just use the percentage of how much you use your vehicle for business
No,
instead of doing every single drive?
Yeah, you have to do every single drive, because what happens is if I just say, hey, it's 85%, okay, the IRS says, where does that 85% come from? So you're still back to I drove from here to here to here every day. So unfortunately, if you want to take any mileage deduction, it's not my rule, and I wish it wasn't, because it's the biggest, I want to say, friction point with my clients is, well, Brad, I don't know, I don't know how many miles I drove. Like, well, you have to come up with a number, because a lot of times we'll meet a new client. Hey, Brad, I drove 20,000 miles. Okay, well, my answer is usually no, you didn't drive 20,000 miles. In real life, you drove 19,997 or 21,057, or, you drove some weird number. You didn't drive 20,000 miles even. Um, and even if you did, let's not put that there, because I can guarantee you're getting audited, because the IRS knows that you didn't drive 20,000 even. Okay, you drove some weird number. So what happens is, a lot of clients that we meet them for the first time, they drove, and I don't know, for a year or two, it was like 6 people that put 20,000 even on as their mileage, and they get audited. Well, yeah, and an agent's looking at it, and she's like, no, you didn't. So unfortunately, federal law dictates you have to track that. If you don't, and you just tell me a number, I'll do your taxes, fine. We're not in the business of doing that, but it's crazy, and that's the federal requirement. So Mile IQ makes it super easy, and it's like 50 or 60 bucks. And I think QuickBooks has one, a mile tracker. We have another client that uses one called Wave. He uses one called Wave. So there's a bunch of mileage trackers that are apps. I recommend you get one. And if you don't, just don't come up. We had a guy that he said he drove 170,000 miles. And of course, he got audited, and that's how we met him. We're defending him. But he didn't drive 170,000 miles a year. I mean, it was crazy. He didn't even have that many miles on his truck, and he had it for several years. So he went to the H&R Block or wherever, and hey, they told me I could do this. Like, well, that's why you're in trouble. So we got him out of, he didn't have to go to jail, but he had to pay a ton of money back. Okay. And so anyways, yeah, I know it sucks and it's a lot of work, but yeah, the app makes it easier. So
what about clothing, hair?
No,
Nails,
no, I wish. I
No.
wish. No.
Oh, you
So,
can't.
yeah, I had a client that threw stuff at me because she had some kind of fancy shoes that were like $1,000, and I told her she couldn't write them off. So, the only time clothing is allowed to be written off is if it's unsuitable for everyday wear. And if you look at the tax code in the actual law, that's like the firemen, they have those big rubber coats. So like those big rubber fireman coats that like we have some people with that had to buy their own and stuff, like cops that used to be in the old days, they had to buy their own bulletproof vests. So like any kind of normal clothing, even if it's got like your KW logo on it or whatever, um, that would not be. I mean, if you buy something with the logo from the company account, that's okay. But like normal clothes, it's not a write-off. Even for like a TV anchor, it's not. So unfortunately, I had a lady that, oh yeah, she was super mad, but she had spent like 30 grand on clothes and yeah, some kind of fancy shoes that like I'm a guy and I'm supposed to know what they are. They were $1,000 and she wanted to write them off. Unfortunately, you can't. So yeah, clothes, hair, nails, all that kind of stuff. And I get it. Hey, especially for women's clothes, that stuff's super expensive. The only cool thing though is if you buy what's called an attaché case, you can write that off. Okay. So yeah, it's a cool little thing. Yeah. So like you cannot write off a purse for tax purposes. But I have a lot of clients that buy these Louis Vuitton bags, and you can fit a laptop in it. Okay. Well, that becomes an attaché case under federal law rather than a purse. So a purse is not. Purse is personal, but an attaché case or a briefcase is business. So I got a lot of people buying these Louis Vuitton and Blueberry or some other kind of fancy. I'm a dude, so I don't know what all these purses are. But if it's is it Blueberry?
It's Burberry.
Burberry. I don't
It's
know.
actually pronounced Burberry, darling.
Burberry. Okay. Yeah, it's got like.
Burberry.
So yeah, I have clients showing to me. It's got like a little picture of a horse on one, and the other one's a VL or something like that. Whatever. But those you can write off, which is a cool little wrinkle. So if you got the $1,000 bag or whatever, hey, that's now an attaché case. The deal is it's got to be an attaché case, not a purse. So there you go. That's the one cool thing I got. So, and for guys, I don't think it helps you. So there you go.
Any other questions from the gallery?
Yeah, Brooke asked about payroll services. Most of them are like, $50 to $90 a month, depending upon what company you go with. So, and is it a lot of money? Yeah. But it's one of those things that if it's one of those things to help you save 7 or 8 grand, it's worth the $50 a month. That like a payroll service, like my guy he sells 2 houses a year. It's not worth it to him, but if you're at that level, it is worth it to you. So some of this stuff, you need enough inertia and momentum to make it worthwhile. So I wish it would just apply to everybody, but it kind of doesn't. So.
Well, thank you. Any last questions? I put his information on the side. I'll send it out later as well, so you guys can maybe reach out with some specific questions, personal questions. Anybody?
Perfect. Thanks, Kristen. Appreciate everybody being on here. Thanks for staying awake for tax stuff. So I know it's boring. Thank you.
Should have you come back. Do you have any knowledge on how people can take money out of self-directed IRAs to invest in real estate?
Oh yeah. We got tons of clients doing that now.
Well, we'll pause on that, and maybe we'll bring you back in a little while to talk to us about how to use that.
That is the big thing. So many people doing that now. So yeah, it's a big thing. So yeah, very strict accounting for it though. You're very strict. So yeah, before you take a couple $100 grand out and do that, you got to have all your ducks in a row. So yeah.
We need to. Yeah, I found that that's a really great source for real estate agents to get business.
Yes.
By talking to people about that. And I've just been told that maybe an accountant needs to explain it to us.
Yes, because so we met a client, did it wrong. Not a mistake you want to make. Not a mistake, because it falls under the purview of Department of Labor, and it becomes a pension fund then. Very strict accounting rules, and you can't just start paying money out like it would be a rental normally. So very strict rules. You want to talk to your accountant or attorney before you start doing anything with it. So. Cool. But it's great. It works good. Awesome.
right.
Thanks, guys. Appreciate
Thank
it.
you, Brad.
Thank you.
Talk to you soon.
And Brad, you can stay or leave. Oh, he went. Okay.
He's done with us.
Blair, I see you on there. I know you wanted to chat, but Chris and I have to be somewhere in 10 minutes. If you want to, Chris, do you have anything for our family?
The only thing I wanted to do is maybe share screen and go to our Facebook page and show everyone all of the events that we're putting out there that we'd really like to kind of channel people to this, along with what Melissa's putting out weekly. So you know what events are happening as far as training, CE, events in general. We're going to try to get everything on our Facebook page. So do you want to pull that up just really quick? It should just take maybe 1 minute. We're trying to get very laser focused in 2021, and our education committee is so stellar on the ALC. It's Stephanie Archer and Amy Morrissey, and they're working very hard on all of the education that we're going to be providing this year. And please note, next week on the 2nd, for anyone that's a little bit newer to the industry, we have a jam-packed, wonderful day. Thank you, Stacy and Brooke, for the idea to smush all of this in one day. So you're going to get to start the day with Miracle Morning with Brooke. Woo! And then we're going to move on to, I forget the exact order, but then you're going to learn about buyers, you're going to learn about dot loop, you're going to learn about sellers, and you're going to learn about contracts all in one day from incredibly intelligent people like Brooke and Kristen and Stacy Patzer and myself. And
Just lucky to be I'm just lucky. Don't forget, lunch is being provided by Priority Mortgage at 12.
And they're free lunch. So it's going to be a good day. So if you want to come in, we probably have space for about 8 people so we can be socially distanced. And we will also have it on Zoom at the same time. So here's our Facebook page. And you just click on the events tab. Right there. And you can see we have so many things coming up. And the class I was talking about, it's called Passport 101. So please sign up.
If you want to see just one other quick way to we have these calendars in probably 3 different areas, but if you went to mykw.kw.com, your homepage here, if you were to come down here and click on the MC 1036 intranet, this takes you, then you click on up here, Market Center. So this is a little, there's a few more steps to get to it. You click calendar or view calendar. Everything is here as well.
Yay, thank you. That's good. And our newest member of the team, I think she had to pop off possibly, but her name is Beth Brown or Elizabeth Brown. Pop onto Facebook or shoot her a text and welcome her to the family. She's going to be out of the Circleville office, which you may not all know a whole lot about, but Michelle Kovac's going to kind of be leading the charge in Circleville. We have a space. We're ordering a sign. We're working on final approval from the region to make it official. You'll all know once that happens. So it's going to be in the next few weeks, we're going to officially have a satellite office in Circleville. Let me know if you have any questions about that. And Blair, why don't you take it away? We still have 7 minutes. Hi.
I'll be super quick. I just wanted to let everybody, sorry about my dog. He's in a cone right now. He's not very happy. So he last week he got fixed, but oh my gosh. Okay. Anyway, there's a new way to get paid on home warranties, and I'm going to go distract him. But
He doesn't care if there's a new way.
What? I'm sorry.
He doesn't care that there's a new way.
I know. He's like, Mom, I want to go outside and I want this coat off right now.
Right.
So, but anyway, essentially you can submit your data collection form as soon as you order a warranty. So you won't have to worry about forgetting and not getting paid for them. So it's called Home Facts. Literally you log in. If you have any recent ones, you can see as well by going to the warranty details page. But I would be happy to show each and every one of you, whoever's interested. And it's super easy. It's literally basic information you can get from the MLS. The first half stays the same. The second half is what changed. So it's things like, is there central air conditioning or NA? And so stuff that you'd be able to access in the MLS. So please feel free to let me know if I can help with that. And I'm going to go because he, of course, chooses right now to start barking. So, sorry about that. Thank you.
Claire. All right, cool. That's all we had for today. We just wanted to talk all about taxes since that's probably fresh on everyone's mind. If there's anything you would like us to bring to the office meetings this year, we have a few mapped out, but we're open for suggestions. Anything you really want to focus in on. I know I'm working to try to get Visit Grove City back because I think they're just a wealth of information on what's happening in Grove City. I'd like to get the city in to talk about all of the development. It's kind of good to get those folks in at least once a year so we can keep an eye on what's happening. But let us know if there's anything else you'd like to learn about. Cool.
Congrats, Jennifer.
Goodbye.
Bye.
Bye, everyone. Thank you. Hey, Kristen and Chris, is it okay if I post like a picture on the Facebook page of the new home facts? Okay.
Absolutely.
All right. Thanks. All right. I'll see you.
Bye.
See ya.